Good afternoon. So as Tim says, I'm Christine Hockley and I work for British Business Investments. British Business Investments is a commercial arm of the British Business Bank, which is the development bank within the UK, and is an independent PLC, but we have the government as our sole shareholder. We're dedicated within the bank to making the finance markets work better for smaller businesses, and our role within British Business Investments is to increase the supply and the diversity of funding to this area. And we do that while also having value for money for the UK taxpayer. But we don't invest directly into businesses. We work very closely with funding markets to invest via our delivery partners. We're continually making investments and developing programs to fit the needs and the gaps within the market. So today we're talking about transformers. Now, I'm sure all the CEOs that have spoken today will agree with me in saying that patient capital is a key contributor to being able to have transformational growth. And today, I'd like to share with you some of the programs that British Business Bank have in this area. So last year, the government undertook the patient capital review. In fact, many of you in this room may have fed into that. And patient capital in this instance is defined as equity investment into innovative businesses that are looking to scale up. So commonly, venture and growth capital. So the British Business Managed Funds Programme is a £500 million programme which is looking to increase the amount of institutional investors in venture and growth capital and also the diversity of those investors, but whilst also giving a market rate of return. As Tim said, the recently launched British Patient Capital Programme is a £2.5 billion initiative which aims to increase the scale-up capital to businesses while also gaining return and then acting as a catalyst to grow the market. But why all the interest in patient capital? Well, the Patient Capital Review identified that there is a gap in the scale-up capital in businesses. And if we look at this particular slide, which takes pre-Quin data, so for a cohort of UK and US businesses from 2008 to 2010, post-seed and Series A, we can see that in the US, the funding rounds are much larger. And as the funding rounds go on, the gap between the UK and the US gets increasingly large. So we know that in the UK, it takes on average 1.9 funding rounds for a business to exit, whereas in the US, it's 2.7. If on a pro rata basis in the UK we had the same amount of funding as the US, then that would have a significant economic impact. We also know that it takes more rounds for a business to grow to a sufficient level to IPO, about 3.5 rounds, than it does for a business to exit via a trade sale, where it's about 2.4 rounds. So if in the UK we're going to have enough businesses of scale to go to IPO, then we need to make sure that there is the right amount of funding available. So the Patient Capital Review, it consulted with many industry experts, and also we found that there was a barrier to the supply of capital. So we know that in the US, that there is a greater allocation of institutional investments into venture and growth capital. About 98% of venture capital in the US comes from institutions such as insurance companies and foundations, endowments and pension funds. In the UK, it's significantly less. It's about 55%. So in the UK, post-financial crisis, we know that institutions that were in this area left the market and many of them haven't returned. There's also the diversity investors is not the same as it is in the US. If we look at individual venture funds, we know that on average in the US, each venture fund has 5.2 limited partner investors, whereas in the UK, it's only 2.9 and 3 in the rest of Europe. So there's a need to increase that diversity of investors because the impact of that may be why we have funds in the UK that are smaller than in the US, around a third smaller, 180 million versus 180 million. So there are many issues here for us to address. There's a scarcity of capital in scale-up, so businesses can't grow as much. There is a lack of institutional investment, and also a lack of diversity within that investor base. Less limited partners and some fund sizes. The fund sizes are smaller. So the output of the patient capital review led to a programme and action plan that was announced in the autumn budget last year. It was there to invest in innovative businesses to release and unlock about £20 billion worth of investment over a 10-year period. As part of that, an extra £2.5 billion was allocated to the British Business Bank to invest in patient capital. So that's to ensure that innovative businesses had access to the finance that they needed to scale up, but also to ensure that the UK remains a key place to build a venture and growth capital fund and raise the funding, and also to scale a business. So let's look at these two programmes in more detail. They're both recently launched. So the Managed Funds Programme, British Business Investment will invest at scale in funds of funds with a patient capital mandate. It will increase the attract investors into this area, increasing the investor base and the diversity of the investor base. And it will do that by investing via established fund of fund managers, and so addressing the patient capital barriers that were found in the review. 500 million will be invested in 3 to 4 existing fund of fund managers who are raising funds of scale with a patient capital mandate. We will invest alongside other limited partners, so on a commercial basis, and the mandate of those funds will be flexible enough to ensure that institutional investment will be able to come in. It's an ongoing programme, and so we will look at proposals as and when they are received, and the programme will continue until the initial wave of funding has been allocated. The 500 million is the first wave of funding, and there will be up to 3 more waves of that funding. So this is an ongoing programme that will give certainty to the market, and it will support up to £4 billion worth of funding. The second initiative, which as Tim said was launched last week, is the British Patient Capital Programme. This is £2.5 billion of funding, which will go into a new commercial arm within the British Business Bank called British Patient Capital. It will invest directly into funds, venture and growth funds on a commercial basis to maximise return and also to manage risk. And it will enable the scale-up funding available to businesses within the UK, the long-term capital, to be more accessible and enable those ambitious businesses to achieve their aims and build world-class businesses. It's going to build on the heritage that exists within British Business Bank of already investing £1 billion over the past decade into this area. And so I think within these two programmes, working together, they're going to create the ecosystem and building on the ecosystem that already exists in the UK to address all the problems that were highlighted in the Patient Capital Review. So more institutional investors will be attracted into the area. We'll have a more diversified investor base. Funds should be able to get more limited partners into their funding, and therefore fund sizes should be bigger. So what it means is that businesses which are looking to scale up to become ambitious and scale up should be able to raise those larger funding rounds that we saw in the US slide, and also more of them. Because our aim, and what I think we all want, is more of these transformers. So these are unicorns, UK unicorns that have been supported by existing British Business Bank programmes. And I think if we could have more of those, that would be fantastic. Maybe there are some in the room today. So if you want any more information on these programmes, please go to the British Business Investments website and the British Patient Capital website, or catch me later on. Thank you very much.